We told people to raise cash on this show in January and told people to put it back to work at the February 9th undercut low. Our target was 28.60, which we hit this week. My guess is that we're going to hang around here. This is the biggest vacation week of the year, but I think next week we're going to break out to new all-time highs.
Okay, so you had a 28.60 target, but that doesn't mean you can't raise your target. You have a new target?
I think the market's going to be over 3,000 by the end of the year.
On the S&P. That's
yes, sir.
Another 140, but another 5% or so. See how quickly I did that, Carissa Cabrera?
Impressive.
140 because we're
faster than the jumble.
That's that you're still working on.
I am.
I'm not optimistic.
Yes.
Whether you're gonna, that's a tough one. Hey, Tom, what was I found interesting about your comments was that the market is more or less fairly valued, but as the Fed normalizes, the Fed is going to pay a lot of attention to what the market does. Are you talking about the stock market or the bond market? Because it almost seems like you were saying that if the stock market got a little bit nervous, that could actually influence their future moves in terms of normalizing. Is that what you're saying?
Well, you'd like to think that that's not the case, Joe, but I think in reality that has been the case in this past regime. The Fed is paying attention to everything, right? And their interest is to continue to have the economy move forward and not have an impact on it one way or the other. I actually think that if we see a little bit of relief, meaning interest rates moving higher on the longer end, it could be the catalyst to take this market a little bit higher, which is a bit counterintuitive.
Plus, you have the president that is willing to say, you know, we're doing a lot of stuff here to try and get the economy going, and you're working against this by raising rates. He's not afraid to say it. And they may actually, they don't want to hear that. They want to stay independent, but you know they had to read the news too. So they probably do want the economy to continue to do well.
Yeah, there's two things I think right now that are cap on this market, and Jeff may be right. As the year goes on, we may be able to get through this this current area, but you know it is the trade talks, and it is frankly the flatness of the yield curve. If you're an investor, you're paying a lot of attention to that right now, given the fact that an inverted yield curve has historically preceded recessions. So this idea or notion that longer term rates move a bit higher, I think will actually help take the lid off of this market.
All right, Jeff. So, I mean, I've never heard you, I don't think, talk about trade. Have you? Do you just, is it one of those things that, if you watch the market, you wouldn't even know it was really happening? So is it really not something that you need to put into your toolbox and as far as things to consider?
The stock market's telling you that the trade war, if you will, is not going to be that severe, or it's not going to happen. If you read The Art of the Deal, you see that Donald Trump starts out with outlandish demands and then walks it back, and then things work out and the deal gets done and he declares victory.